Let me now welcome on board Dipan Mehta as well and find out what he's making of the markets. Dipan, hi, morning. Good to have you on the show as always. Wanted to understand, Dipan, where is it that you feel that the pain is overdone and the EPS downgrades are well adjusted for and one can start buying the decline if already that's your thought?
Yeah, good morning, and thank you for having me on your show. No, I think that one cannot generalize like that a particular sector or so, but we are seeing that companies which have reported good numbers, they are interesting to look at, and a correction has taken place over there, or prices remain stable, which means the P multiples over there certainly have compressed, and that's I think where investors need to kind of focus on. But if you ask me across the board, if there is any sector where correction is over and done with and it has reached an attractive level, I don't think any such sector is there in our view at least.
So let's start off with Reliance first, Dipan, because you track that one quite closely. I mean, it's been made famous the kind of market cap loss that the stock has had in the last 1 month or so. Comfortable levels, you think, to start adding positions back?
No, not really, because this September quarter numbers were a bit disappointing, and the flag bearer of the company, which was the telecom division, that was the one which kind of drove the profits and saved the day for Reliance. The other businesses, other divisions were really quite disappointing, and the key question in Reliance still remains unlocking of the value. And if it's just going to be IPOs from the two divisions, that is retail and telecom, then the holding company discount will be quite severe, and that's something which you want to avoid. So just waiting for a buying trigger, which has to come in the form of unlocking of value for the retail and the telecom division. Right now, investor buying Reliance is buying three businesses. Not all of these businesses align with their investment strategy or their investment horizon or outlook for that matter. So I think that that's the key question which remains in Reliance, that how are the three businesses going to be listed separately? And if it's going to be just a simple IPO with Reliance becoming a holding company, then you could even have another 5-10% correction of the stock price.
Quite interesting. Let me welcome on board Sudeep Shah as well. Sudeep, hi, morning. How are you reading the charts of Reliance and do you sense further weakness in?
Yeah, good morning. Yeah, see, Reliance, if you see in the last 15 to 20 sessions, there has been there's a consistent downside momentum in the stock. We've seen important moving averages get violated, and the stock has also now gone below its Jan swing lows. I feel right now the way the stock is placed, there could be pullback because of the oversold nature of the chart, but that pullback could be limited up to 1300, 1315 thereabouts, and that could be the zone from where the selling pressure could reinitiate. The overall support on the downside, what we are eyeing at, is closer to 1230, 1235 levels. So a good 3.5, 4% from the current levels, we feel that the downside could still continue up to that zone.
Just looking at the market construct, and let's just draw down on some of the rank underperformers. We just discussed Reliance Industries, but it was no different for Britannia, seeing the earnings reaction, and definitely not the case with Asian Paints as well. Dipan, what about, individual names like Asian Paints and Britannia? I mean, of course, different challenges, but do you think the stocks have fallen enough? Can one start nibbling in already?
No, not really. I think that you should be looking at the exact opposite and try and sell at every rise whenever there's a pullback. Because there are structural changes which have taken place over there in Asian Paints, the immense competition which has come in, and base effect and other factors have led to slowdown in the demand. And that certainly is going to cause slower or stagnating earnings for several quarters or so. I think the best days of Asian Paints are perhaps behind them, so it's best to exit out of the stock at the earliest possible opportunity. In the case of Britannia as well, it had a great 10 years, right, from 2010 to 2020. And the entire strategy of the management was to convert itself into a complete foods company with dairy products and a lot of other bakery products, not just biscuits. But that strategy really hasn't played out well, and still biscuits remains the primary product for the company, and that particular segment is becoming quite mature, and Britannia itself also has expanded its distribution network to the fullest possible. So those gains are also behind them. And going forward, I don't expect the company to, report super profits, at least not 15, 16% type of profit growth, which is the bare minimum we require for an investment case. So from that point of view, both stocks are a sell for us. Having said that, we and our clients have no investment in them, so our views could be a bit biased.
Dipan, when the shakeout happens, markets frankly don't care. They don't differentiate between men and boys. The selling is universal. When a rise happens, the buying is universal. In this shakeout, are there any pockets where you said that, look, I always wanted to buy it and I'm getting a chance to buy it, and I'm already a buyer in terms of my comfort level? Which are those companies or those businesses?
See, Nikunj, we've always been attracted to innovative businesses, one of the kind type of businesses. And I have a template, I have a list which is on my watch, and I feel some companies are coming to reasonable levels. With disclosure that we and our clients have invested, maybe investing, there are companies I think which Street thought didn't do well, but I think that they have great potential. Platform companies like IndiaMart, Intermesh. Then there is Zaggle Prepaid, Rate Gain Technologies, and then also there is Affle India. I think these four companies, have very different business model, and there could be others as well that we are tracking quite closely. I think these have got a great future with a 5-10 year type of a view. Zomato at correction, I think, has got a great future as well. So if you get these stocks at reasonable valuations, and no doubt some of them are facing immediate challenges like rate gains as an issue with a customer. IndiaMart Intermesh has got slower subscriber growth. Collections, future collections have slowed down a little bit. They will work around these challenges. But end of the day, they are great businesses with superb scalability and one of the kind. They have got very strong competitive moat. So I think that if you are patient and have a 3-5 year type of a view, these stocks they've corrected adequately or they reach your price level where you get comfort. They are the ones that we are kind of focusing on because these stocks you can't buy them in a bull market.
Okay, fair enough. Those are a lot of names that you've shared with us. Meantime, of course, the street is closely going to watch out, Dipan, for the Swiggy listing. And there hasn't been too much of fervor when it comes to the kind of subscription numbers that we have seen. A lot of parallels being drawn with Zomato, although one would say it's not apples to apples. But how would you look at the listing of Swiggy, this behemoth within the e-commerce food delivery space, making its debut today, and what investors who didn't get to participate in the IPO should do on listing day?
I think that we already have Zomato, and that is going to set the valuation for this particular space. And I would just have comfort with Zomato because we've seen their listing history. The management strategy has been very well elucidated, and we are seeing a clear-cut roadmap to profitability for both divisions. Swiggy is maybe a few quarters behind. Again, an interesting business as well. Keep it on your radar at some point of time when the valuation gap between both these companies is really huge. That could be a good entry point. But look, when you like a particular sector or an investment theme, it always makes great sense from a risk return profile to just buy the market leader. I mean, look at paints, Asian Paints. I mean, I know it has fallen upon a bit bad times, but when the paint industry was doing well, the best returns came from Asian Paints and not the other companies. The same is with tires. MRF delivered the best returns. In the case of cement, it was Ultratech and Shree which gave the best returns. So if you like an industry, you like an investment theme, go with the market leader. I don't think that you can make a mistake that way.
Okay. Such a big wealth creator, we don't talk about it. It's not FMCG, it is not packaging. It doesn't matter what is happening to the FMCG sector per se. This is one category which continues to surprise us in terms of a company which continues to surprise us. Dipan, have you looked at Verun Beverages? I mean, I've got all kind of crazy numbers that, okay, how expensive Verun Beverages is. Compare this with global Coke bottlers in Turkey and in China, and Verun Beverages is like diamond trade, silver trading at the price of diamond.
Yeah, well, first of all, Nikunj, huge disclosure. It's one of our top holdings and been a great wealth creator. And I would classify it as the best performing FMCG company. The product is an FMCG product. And we have seen superb execution come through from Verun Beverages for the past 4 or 5 years or so. all the acquisitions which they did, they have turned it around, they have grown the market, and they have got everything right from a bottling perspective. And I'm pretty positive that whatever acquisitions they have done in Africa, they will replicate there as well, and it could be a bit of a growth driver as well for the company. The thing is that this particular category is under-penetrated, especially in rural areas. And because of electrification and more stability when it comes to supply of electricity, they're able to really go deeper into the rural markets, because then you can put a fridge and the fridge will have a majority of the day, it will have electricity, and therefore the beverages can remain cold. And that's what has really driven the growth rate for the company. See, when it comes to FMCG, look at Britannia from 2010 to 2020. What went right was expanding the distribution network, and what's going right for Varun Beverages just now also is expanding the distribution network till it reaches every nook and corner of India. And then perhaps you can say that the category has stabilized, but it is many, many years away to reach that particular level for Varun Beverages. So still remain very positive on the company. And look, these are the stocks, in a correction, it's maybe trading at 80 times or so, but you get it at 60 times or something like that, then you could invest in it for a long term. But right now, I think it's better to just remain invested as we are, despite high valuations. Doesn't make sense to make a fresh acquisition at these PM multiples. But in a correction, these are the kind of interesting growth stories with great future, 5-year runway for growth. These are the stories and stocks that you need to really acquire in a bear market.
It's interesting in terms of the data as well that we've got. A lot of these PSU banks are off significantly from their 52-week highs. IOB, for instance, has scaled down by nearly 40%. UCO Bank, Punjab and Sindh Bank, Bank of Maharashtra, close to 28% off from the 52-week high. Naresh, just wondering what your take is on some of these PSU banks on the charts.
So they've made a good pace and starting to make a up move, but given the market conditions, I've been finding it tough. So if you look at Bank of Baroda, multiple bottoms around 230, the stock post numbers saw a move about 250, went to 265, and is still struggling around that 250-55 mark. Same is the case with the largest one, State Bank of India. The stock gave a breakout above the 820 mark. Post numbers also did well. Now we are back to 820. Same is the case with the PNB. Overall, they've been relatively better in this market, but once the market forms a bottom, PSU banks could be interesting as a leader in the banking space going forward.
Meantime, Sudeep, let's get in your take on some of the high flyers in trade yesterday. A Jubilant Food really stood out, something like a Ramco Cements or L&T Tech. Have you marked the charts?
Yeah, so if you see Jubilant Food, that stock was in under selling pressure for the better part of September and October. But the way the stock gapped up yesterday, it stayed at higher levels above 630. It has taken out that entire consolidation between 620 and 630 zone that was there for the better part of October. So I feel now, even if there is some kind of stability into the markets, maybe. So here from the current levels, also the stock could be looked upon on dips with 615 as a support. And I feel on the upside, the stock could now go up to 670, 675. Now, Ramco Cement, especially after the stellar numbers that the stock had delivered day before yesterday, we've seen a decent sized gap up opening, and post that for the entire day when the markets were under selling pressure, the stock sustained its gains, and we feel that the way it has closed at the highest level post February 2024, taking out all the intermediate resistances. So from the current levels also, I feel that the trend here could change, and it could be outperforming against the other cement peers also, as well as the overall markets. So while there could be some volatility because of the nature of the stock, but overall 880, 885 now becomes a strong base here. And on the upside, we feel that the levels of 975, 980 could be witnessed, where there is one open gap. So I guess that zone could be retested once, 975, 980 kind of levels.
Another performing sector has been pharma, and numbers have been decent. I mean, that's one space where only upgrades have come. But I don't see too much of price action, which is that Divi's has done nothing after numbers. The similar story, I think, is there even if you look at other pharma companies which have come out with numbers. Why pharma stocks have not reacted to numbers which are above estimates?
And Nikunj, I think broadly because a lot of it was anticipated. This is pharma doing well is not a story of this quarter. It's 2-3 quarters since Pharma has been reporting exceptionally good numbers. The stocks have rallied for the last year or so. It's not that they remain stagnant. They've given good returns also. And I think investors are feeling overall because of market sentiment, and these stocks also have reached reasonable valuations. And I think for a lot of the companies, some of the exclusive products where they had exclusivity when it came to supply, those revenues also are kind of flagging off. So one should expect slower growth rates in pharma over the next few quarters or so. But yes, I think that pharma as a sector one should definitely be overweight in. Very impressed with numbers which came from Sun Pharma. I think that's a great stock to have as part of your core holding. Again, a disclosure, we and our clients are invested, and they are making very good progress on the specialty products business, and that could really scale up pretty well and improve the profit profile of the company. Also, another company which is very expensive just now, but we have an eye on it, have not invested in it as yet, is Mankind Pharma. And we are quite positive on this recent acquisition which they have done. They'll be able to extract maximum productivity and benefit out of it. And I think that amongst all the pharma companies, Mankind Pharma's business model and their strategies are far superior, which is why it trades at a super premium. But that's another stock in a bear market and a correction one should look at acquiring on a long-term investment.
Okay. Naresh, let's talk about pharma because that's where, little bit of gains are still left and the desire to buy long is there. Numbers are not that bad. Technically, these stocks have done well. Is pharma a sector where you should start buying now, Naresh?
So it's very selective in terms of price performance. So if you look at DVs, it has continued to do well, but Dr. Reddy's continues to be more sideways. Sun Pharma has done well, is now doing a little bit of a correction. But overall, the structure is still positive. We've seen selective moves across the board to be a little more different. But a correction here would be a buying opportunity. A lot of these names are just down 5-7% from the top. But the longer term charts are still positive. It's just that you don't want to be buying into a dip which is just 5-8% as of now. Would wait for a correction of say 15-20% from the top. If it comes, then maybe pharma could be an interesting place.
Dipan, I have a simple question. Same time last year, Paytm was in a downward spiral. Everyone thought that it's end of the road for Paytm, but now looks like it's a new sunrise. From 400, Paytm has gone to what, 800, and the problems of past have become history now. Where is that business headed? Regulatory concerns, but a great opportunity. Good brand, but nothing great in terms of the fintech space.
Nikunj, I'm still a bit unsure about what to do with Paytm, what kind of a view one should take. Because end of the day, it's not yet solid into profits. And it's into many businesses also as well. And sometimes there is some slowdown in some pockets as well over there. And when it comes to the financial services space, when it comes to banks, NBFC, there is just huge amount of choice and such attractive valuations that maybe, the risk return profile is better in stocks other than Paytm. But I did say earlier in the show that platform companies, in our opinion, have a good future, and certainly Paytm is a platform company. So we are watching it closely. I think it's still muddling along, and we don't have a clear-cut roadmap as to when it will turn profitable. So at some point of time, I think Paytm may find itself into our portfolio as well. But for the time being, we are just waiting and watching and seeing how the developments are taking place and where exactly is the break-even point from where it starts to report solid profits. So I would say that from an investor's perspective, if you're an investor in Paytm, remain invested. But from someone who's looking to invest in Paytm, I would just say wait and watch.
All right. It's been a pleasure interacting with you, Dipan. Thanks very much for sharing your market outlook and view on individual stocks. 9 a.m. So let's check in on those pre-open rates. And for now, the Sensex showing a decisive move on the downside, and it's quite the opposite for the Nifty, which is decisively in the green. But I guess 9:15 will be the true test as to what the market direction is today after yesterday's big fall. Let's find out those mid-cap strategies then. And Sudeep, what are you tracking today? Sudeep, if you can unmute yourself.
Yeah. Two stocks, one from the mid cap and one from the large cap space. So the first stock from the mid cap space would be Zomato. Now, Zomato, after a stellar run in the last 12 months, almost from 142 to 298, the stock corrected. There was a profit booking witnessed till around 240 to 45 zone. But last few days, we have been seeing a decent consolidation around the 100-day moving average. And especially in the last 2 to 3 days, there is a rebound from lower levels also. So I feel from the current levels, now the stock is almost ready to make another move on the upside post this consolidation, and this could be bought with 254 as a stop loss on the downside for a target of 268 and 272. The second stock that I like is Infosys. Now, Infosys too has been outperforming in a way compared to the broader market, as well as a lot of other large cap stocks. And in the last 4 or 5 sessions, there has been a decent move from 1750 levels to 1850, 1840 thereabouts. And important resistance is the medium short-term resistances has been taken out. So I guess from the current levels, Infosys also could be bought with a stop loss of 1840 on the downside and a target of 1920 on the upside.
If you like this video, then like, share and subscribe to ET Now.